All right. Welcome back to Stacks Talk. We have another wonderful session for you. And in this session, it is nothing ventured, nothing gained. And the reason why I really wanted this session is that you kind of get out of something what you actually put into it. And this is an economic thing. This is the government investment in space systems. This is private equity investment into space systems. This is public market investment into space systems. And there's a lot to understand. And because I'm not as smart as my friend George, George is the chief economist from MilkyWay Economy, I'm actually going to hand over the stage to him, where he's going to give us a little bit of ground truth, a little baselining for us to start this discussion. So George, the floor is yours.
Thank you, thank you. All right, so we're going to do this like it's one of my classes. Okay, so there's going to be audience participation. I see everyone's badges and names, so it's going to be fun. So this is what we're going to do. We're going to start with getting an idea about what I mean when I talk about the fifth industrial revolution. So if we think about the industrial revolutions that we've been through and that you've all learned about before in Economics 101 or Finance 101, if that was your thing, the first thing that happened was the British, in particular, learned how to harness the power of coal. And when they harnessed the power of coal, they were able to produce a greater amount of work than what they could just by burning wood. And this also freed them up to use the wood to do other things, like build giant sailing ships and take over a big chunk of the world, right? And then after the first industrial revolution, we had another industrial revolution. It was the second industrial revolution. And for the second industrial revolution, what did we do? Well, now that we had all this power, we were mechanizing around that power. And we had to have more connectivity, and we did that through the railways, right? And so the railways allowed us to connect greater distances, travel greater distances, and transport those goods. But we had to coordinate with each other. It used to not matter so much if I said I'm leaving at 8 o'clock and I'll see you when I see you and we can unload the horses when I get there. Now we have trains, and trains have to have schedules. And so we have to talk to each other. And how do we do that? Well, we did that with telegraph and telephone, right? So there's your second industrial revolution. Again, we had the second industrial revolution because it created needs out of what was built in the first, all that extra energy, right? Now we have mechanisms. And then we have our third industrial revolution. Some of us in the room were alive for the third industrial revolution. That's when we started getting into telecommunications, right? We started getting into chips, microchips. First, of course, like chips, or processors the size of this room. And now, of course, they all fit in our phones and our pockets. Yeah, that's your third industrial revolution, right? And we had that. Why? Because now we had power that we had captured, right, through coal. We now had mechanization, and now we had standardization, electrification, and miniaturization, okay? And again, why do we have that? Because the first and second industrial revolutions necessitated that need was met, right? And then we have today. Today is our fourth industrial revolution. I sort of stand out here on a little bit of a limb. Some of the other economists that you'll hear from time to time, they won't say we're in a fourth industrial revolution. They'll say this is just a continued trend line from the third. I disagree strongly. I think that if you think about some of the things that we've seen, especially when it relates to the four key elements of the fourth industrial revolution, biotech, fintech, new energy, and big data, for each of these, and of course when I say big data, I mean AI. Thank you, somebody. I'll give it to you. Yes, sure, quantum, throw it in there too. We'll play buzzword bingo after this. And the reason those four things are important is, again, which things from the second and third industrial revolution haven't been solved yet, right? Where is innovation leading us, right? It's to solve these next four things, right? And then it comes to our next logical conclusion, which I will tell you is our fifth industrial revolution, which is the industrialization and the economic reaping of what we've sowed in space. So it's going to be opening up of the space economy. Now, we are not there today. And so now let's go back to nothing ventured, nothing gained, nothing earned, right? So today we are in a market where you have about $125 billion a year spent on space by governments around the world. And guess what? The US spends the majority of that. And then we have a couple competitors who spend a little, but again, that big number, that headline number, that 125 billion, that's coming from government spending. And we can't ignore that, right? We have to admit that they're a huge driver of the spend, okay? The investments that come in from venture and private equity, right? So my old banker friends, those investments that come in, they sometimes register in the $15 to $20 billion range a year. That's kind of small compared to that $125 billion number, right? And again, we love Wall Street to be interested, right? We love Silicon venture firms to be interested. But we have to be realistic with each other and talk about following the money and where it's coming from and who's writing the bigger checks, okay? When we have a real space economy, it will be a space economy where the government is one of many participants. That is not today's market, but that is the idealized future state of the market, okay? So I think when you have to then take that next step back and say, okay, for the firms, whether they be private equity or venture capital, they're participating. Why are they participating, right? Well, they're participating because they all want to make their 2 and 20, right? Everyone knows what the 2 and 20 is, right? The 2 and 20 is the 2% that you make on every dollar that comes in. Because remember, venture capitalists and private equity firms don't actually have money themselves. These are other rich people's money that they get to manage. It's their job to manage it. They're not actually the rich ones. Well, they get paid well, but they're not the actual rich ones. The really rich people are the limited partners, the LPs, right? And so they collect a 2 and 20, which is the 2% on all the capital they have in, and the 20% on what they make them, okay? But remember, if I'm a greedy banker and I want to make as much of a 2 and 20 as possible, I'm going to invest in everything, right? I'm going to invest in everything that meets my IPS, my investment policy statement, that can get me the best risk-adjusted returns, right? Now, some IPSs have very specific call-outs. Some investment policy statements say, I'm a fund, and it's my job to pick the best AI company out there. And we've seen dozens and dozens of those lately, right? That's why there's so much money going into it. But other investment policy statements are more broad. They say, here's a lump of money, go make me money, and be ethical about it if you can. That was a joke. And so you can laugh. We all know it's Wall Street. And so with that in mind, there's not a lot of call-outs for space. And there's not a lot of call-outs directly targeting our industry. So what do we have to do? We have to realize that to bring more money in, there's a conversation gap here, right? Because we all know that space is deep tech. We know that space is hard, right? It's difficult, it's expensive, it takes experts and a lot of money to make things happen. Well, guess what? That's the definition of a deep tech company. There are plenty of investment funds out there that have deep tech imperatives who don't currently invest in space. So they have an investment policy statement that says they can do deep technology, but they're not doing space. That's a miss for our industry. That's a miss for our industry, that we're not communicating that space is part of deep technology. That space is an integrate part of space technology, because those dollars can be unlocked. Because again, with that investment policy statement, these guys making the 2 and 20 and gals, they're incentivized to put money in those buckets, okay? So the second part of this is, for the folks that don't have the investment policy statements that directly call out deep tech, you have to think, okay, what are they going to do? Well, they're going to do whatever makes them the most money on a risk-return basis. And this is really important, because something I talked about earlier, but I want to make sure I hit again, is that when you have risk, that means that sometimes I don't get my money back. And if I don't get my money back for investors, a couple of things happen. So the first thing is, I don't get to make my 20, and I really want to make my 20%. But the second thing that happens is, they usually won't invest with you again. So then you have to go find a job, and you have to sell your house in the Hamptons, and all of that sucks, right? And so, your wife leaves you, your dog leaves you. It's awful. And so what do you have to do, right? You have to make money, but in a way that adjusts for risks. How does the space economy adjust for risks, right? The space economy adjusts for risks because we have to communicate to them that we have a great buyer. We have a great customer. It's Uncle Sam, the red, white, and blue with the little white beard and all that, right? We have a great customer. And guess what? That customer is reliable, and he's faithful, and he's there for us. Oh, wait. Oh, is that not always true? Oh, it's not always true. I see the grimaces in the room. No, and let's just be honest about it. It's not always true, right? Sometimes programs get stood up, and it says, hey, here's a couple $1 million to go do some research, and don't worry, there's going to be a contract at the end. And guess what happens? That's right. There's no contract at the end. And that's hard. And you have that happen 2 times, 3 times, 5 times, 50 times, and a pattern develops. And then the bankers say, well, wait a minute. I'm not sure you're going to be able to convert that program. That's deep technology. That's great stuff you're working on. But I don't know if it's going to result in revenues, because you know what I care about? I care about revenues and making money, because then I can say you're worth more when you sell, when you IPO, right? So we have to realize that someone making investment decisions balances all of these things, right? They have to think about the risks of your customer, the risks of your products, the likelihood that you're going to get that magical thing called a purchase order, right? It doesn't just work on a hype cycle. And so when we talk about space, and we talk about the space economy, and I promise, Laura, I'm bringing this back. We talk about space, and we talk about the space economy. I think it's just important that we effectively communicate that we have a situation where we have a monopsony, right? We have a government, we have the US government, who is a major purchaser. And you know what? That's okay. The US government as a major purchaser buys down risk. And for companies that are located in other jurisdictions, particularly friendly jurisdictions, those companies are also getting risk bought down when they get major contracts from their corresponding governments. This is the same pattern that we've seen in plenty of other industries. This isn't unique to space, right? There are many companies out there that have a great living and have public company stocks that get 90, 95% of their money from Uncle Sam, right? Booz Allen gets something like 85, 90% of its revenue from Uncle Sam. Lockheed Martin, same thing, 85, 90% of its money from Uncle Sam. And many others, right? And it's okay. We don't chastise them. We don't kick them out of the S&P 500, right? We're like, hey, good. You're providing a service. You're making good returns. But for some reason, when we talk about space companies and we talk to space investors, what do they always say? Oh, where's your commercial customer? Where's your dual use? There's not a lot of dual use for missile tracking, right? There's not a lot of dual use for figuring out where the submarines are that we don't like, right? Those are really specific use cases that are really expensive that no one else is going to pay for, right? And we can't fool ourselves, but most importantly, don't try to fool the Wall Street or don't try to fool the investors on this, because they know it too, right? So tell them, right? Because they're going to find out in their research, they're going to hire a consultant or someone else to tell them this. And it's better if you just make sure it's very clear that, listen, at the stage that the space economy is in right now, it's really important that we have a government customer. And this government customer has provided us this contract, and here's our pathway to the next one. And this is this other contract that does this, and this other technology that does this. And we're working on all these things, and these are their pathways, right? And this is what the purchase orders look like. And oh, by the way, this one, right, this one out of the 5, that one has dual use, and we're really excited about it. And we've got some telcos who are also going to buy it. We have some people who want to track emissions, right? It turns out like it tracks how much diesel fuel is being burnt in the desert, and there's only a couple reasons to burn diesel fuel in the desert, but also allows you to check methane emissions, right? Great, dual use. Let's sell that too. But don't hide the ball, right? Don't make it sound like everything is commercially available off the shelf. Not everything is COTS. Not everything is dual use. And investors are okay with that, right? It's no different from in biotech. Oh, I'm inventing something that allows me to deliver customized antibodies, right? Customized antibodies. That is very specific use cases. You don't then have the biotech company turn around and say, but guess what? It also turns out it's a diet pill. That's not how it works, right? What ends up happening is they do their testing and they find out later, oh, guess what? It actually also made you skinny, and then we all inject it in ourselves, right? And so, and so, I mean, I haven't injected it, but people do. And so, the point is, be brilliant, right? Be brilliant space scientists. Be brilliant operators, right? But when you're interacting with the economy, just know the realities of it. When you're interacting with a financial guy or gal, be honest with them, right? Because they're going to do the research. They're going to figure it out. So I'll leave it there.
I probably should have said that into a microphone. You had quite a quick end there, my friend. But hey, right? How, with Uncle Sam being, a major contractor, a major funder, the number one funder by far. We heard it this morning. We hear it every year from the Space Foundation, from their annual space economy report. But how can space attract more venture capital privately, as in private venture capital, right? Because at the time that we're talking right now, we know that the big shiny object that the government is spending a whole hell of a lot of money on, right? Everywhere we hear it. Everywhere we hear AI this, artificial intelligence that, and it's coming from people that don't even really know what it is. And I'm not really sure I do exactly either, but hey, I've got you. So that's a start. But the thing is, PitchBook, just for the first half of this year, they had stories coming out saying, oh, wow, there's so much more venture capital coming into the system for space companies and for space technology and for startups and space exploration. And it's just for the first half, maybe a wee bit over $4 billion. That's a big B. That's a lot of money. I could do it just like a fraction of that, and my life would be pretty good. Right? I could retire now, but that's not going to happen. However, artificial intelligence in the first half of this year has gotten $40+ billion of venture capital investment for things that aren't proven out. They're kind of sort of a part of the fifth industrial revolution, but it certainly isn't like building the railroad to the moon. Right? So how do we get more venture capital into the fifth industrial revolution? How do we actualize that?
Well, there's two things there, right? So
there are actually 5.
Well, there's 5. Oh gosh. There's a minimum of 2 things that I want to make points on there. So the first is some of us have seen this dance before, right? The markets go through these ebbs and flows where they get excited. Okay, and right now the markets are pretty excited about this big backlog of companies that haven't gone public. And when they go public, it's called an initial public offering or an IPO, right? And so right now the market's excited because there was a real drought in IPO activity for the past 24 to 36 months. But now we're starting to see a lot more IPO activity, and some of that IPO activity is space companies. And so when you have space companies IPOing, what that does, and think about how the IPO works, right? Just mechanically here for a second. The way the IPO works for us, right, in this room, like average people, is now I can trade something on my Schwab or Robinhood app, right? That's how an IPO works for me. Right now it's on my app. That's how it works for all of us, right? But the way an IPO works for the big boys and girls is when they have the IPO, that's their liquidity event, right? And a liquidity event is when they're able to take some chips off the table. Right? And that means that they're probably done participating, right? They're winding down their positions. They were around for the Series A, the Series B, the Series C, the big run-up of the technology, the big run-up of the company before it was public, right? When it was just in somebody's garage, right? We have all heard these stories, right? That part of the journey is before the IPO, okay? And so...
And that's the part what I'm talking about, like where venture capital should be jumping in, right?
This is where they play, right?
Okay.
But again, what's important is that money doesn't get unlocked until the IPO, right? So when you don't have companies IPOing in your sector, that means that somebody has to IPO in another sector and then come to your neighborhood, right? So let's pretend that I made a whole bunch of money in consumer goods, right? I'm a coffee salesman, right? I made a bunch of money in coffee.
You are making money in coffee, George.
I am. I own a coffee company, and so we. But I didn't say its name. It's not shameless. And so when it IPOs, if I then decided to put that money into space, I'm crossing industries, right? That is not the way the majority of the money flows, though. What happens is someone goes through the iterations of a company's growth, and then it IPOs. And then when IPOs, what do? They turn around and they go, okay, what kind of looks like me around here? Oh, you kind of look like me, and you kind of look like me. You know what? I think I'm going to write some checks to you, right? And then they write checks to them, and then they grow up, and then they have their IPOs, right? And when that happens, it's sort of self-fulfilling for an industry. If we look at space, we haven't had a lot of that. And unfortunately, the last time we had a market phenomenon with these ebbs and flows, which are normal, it was during the SPAC phase. Right, I know.
I was wondering who was going to mention the dirty word first.
It's like the dirty word. You can't spell space without SPAC. Ooh. Anyway, but we all remember those memes back from a few years back. And
it saved Iridium. I mean, that was the first space SPAC, and it needed the money, and it's returned its investment.
There are some that that's happened for, and then there are another 11 that it hasn't. And so what that means is that without those big outcomes at the end, there's no investor standing there that just made their $1 billion in AI or their $1 billion in, a sweatpant line that people shouldn't wear because they're too tight, right? And when they make that money, they just pour it back into that same industry. But in space, we haven't had that, right? And so that really holds back the capital coming back in. So what space needs to have more capital is space needs some success stories. Space needs some IPOs that will drive that capital back out to the smaller mid-sized firms. Because without that, you're recruiting capital from other markets, and that is hard.
Well, then, is that kind of a public relations issue? And I say that because we have the ISS, and it is going to be retired, allegedly, sometime before the end of this decade, right? And we have recently had an IPO for a space station company. Uh-huh. I mean, does anybody? Yeah, I know. Okay, that
No,
that hurt. Go on. No, answer it, George. Just answer the question I haven't asked.
So space is expensive.
Space stations are expensive.
Space stations are really expensive, and so if you're going to put a space station up that even looks a little bit like the ISS, you're talking numbers that start with B's, billions of dollars in cash, right?
Yeah.
Probably between 2 and 5, right? And so, depending on how small it is.
I hope it's bigger because they need spins so that we don't
kill
our
rack
astronauts.
Space. We're already out of rack space, right? So it has to be bigger.
Yeah.
And so then the question becomes, even if we have other companies IPO that want to do space stations that are currently private, is that going to return to them $1 billion in capital expenditures and CapEx? They can go turn around and pour it in to build the space station? Maybe. But really, the question is, does the venture sector, does the private equity community believe that there are ISS replacement contracts out there that are going to be awarded, right? We've seen delays in those. And so that makes me more nervous than excited. Even though I want a U.S. space station, let's be really clear, it just makes me more nervous than excited. And that if I'm nervous, not excited, and I love space, what does that mean for the company that normally invests in AI, and now they're looking at space and they're like, well, that's not a great signal.
All right, well then, what would you say to venture capitalists? What do they need to know?
I think the big thing is that space is diverse. And I know we know that, right? Because we're at church, and I'm talking to the choir here, right? But we know space is diverse. We know that there's all kinds of different space companies and all kinds of different space technologies.
Different space opportunities.
That's right.
That aren't just space, that there are opportunities for rockets.
Yeah, there's other things.
That these opportunities are in pharmaceuticals. These opportunities are in agriculture.
Yeah.
These opportunities are in transportation. These
I love drugs. I love
opportunities
food.
are in fuel.
Yeah.
You like drugs? Yeah, I like drugs too.
Big business, right?
Yep.
And so, but you have to explain to them, right? You have to explain to the venture community. There's this information gap. There's this PR gap, like you talked about, where they can't
connect the dots.
No, they think you're a space company. You must make rockets. Nope, I don't do that. Oh, then you make satellites. Actually, I don't do either of those two things. Shh. And then there's like just silence. It's awkward. They start playing with their phone, and the Zoom call ends, right? And so that information gap, that's our problem as an industry. We have to let them know that, no, I don't do either of those two things. I actually make a sensor that does this. I actually don't do either of those three things. I analyze data that's coming down from satellites. I'm still a space company, but I'm really sort of a big data company because I analyze data. And you like big data, so, right? Like, we have to be able to have those types of conversations. And so when we get painted as one big industry, which again, there's not a lot of us, so we do have to cooperate. But when we get painted with one broad brush, it doesn't do us any favors, right? Because there's some real specialty things that we're doing that can individually be interesting, but they have to be willing to drill down.
Well, what about corporate venture? And that actually could play into assisting the space community the space bubble, the space church, as I like to call it, in proselytizing, right? I mean, if you got 3M, if you got a pharmaceutical company actually investing venture capital into space systems to further their business case. So what do the corporate venture offices need to understand? What should they be doing? What are they missing?
So corporate venture, or CVC, right? It's like venture capital's cousin, right? So CVC, corporate venture, is really interesting, right? Because they have very different IPSs, investment policy statements. We talked about this earlier. And the reason it's interesting is because their primary goal is to drive returns for the corporation, right? And to drive returns for the corporation, what do they have to do, right? Well, if they're going to win their contract or service their end users better than the other guy or gal, that means they need the latest technology. Well, maybe that latest technology has something to do with crop monitoring, right? Maybe that latest technology has something to do with like the protein folds like this instead of like this, right? And so they're more willing to participate and take chances when you are parallel to them, right? So corporate venture capital, because it has a different set of investment goals, is, I think, really ripe for space companies to access.
And how should space companies then go about getting that? I mean, I think about, for instance, Varda, right? And they were working on a particular drug that I believe protected people from a particular kind of a virus, right? I think it actually was HIV. But anyway, it's pharmaceuticals, right? And it's a platform for testing as well as a transportation company, all wrapped up into one, right? But they're not a full stack, as in they don't have the rocket that sends it up, but they have everything from that point onward. What is corporate then missing? That's an adjacency that one would think that you would want to bang the drum even louder for. I mean, why don't we have more, pharmaceutical or type companies investing in space?
So you know, but I sit on
I
a board.
don't. That's
Okay,
why I have you.
But I sit on a board for a biotech incubator also, and I will tell you there is a tremendous amount of demand there, and dollars, right, sitting over there. I think what it comes down to is what I talked about earlier, which is this de-risking, right? They need to know that these drugs, these proteins, these experiments can be safely returned. And if they're not being safely returned, that they can get the data they need, right? They have good access to the data. And also that their study lines and study programs have continuation. And that's a big issue right now because I have talked to several biotech companies right now. They're saying, okay, even if I get space on the ISS today, if I have a 7-year test cycle, what happens if my space goes away in year 5? Because that does not work for a multi-million-dollar drug that they're trying to turn into a multi-billion-dollar profit center. And so I don't have a good answer for that. They're looking at alternatives on ground testing, right? If biotech decides that it can figure out a way to do micro and zero gravity ground testing without actually having to really go to space, that's not going to be good for our industry.
So then, how do we move that forward then? I mean, right? I mean, I'm talking about adjacency. I was talking about it also in terms of being able to proselytize. So then how do we flip that around?
I think
how do we solve?
So the solve comes in what all humans want, right? We all want the big win, right? We all want it to be our team. Right, and if you're a Red Sox fan, right, like we all want it to be our team, right? Like go Sox, right?
Go Dodgers.
Okay, there we go. I knew it was coming. I set you up for it.
But
we all want our team to win, and I think in space, especially for this particular thing, we need a win, right? Just like I was talking about with the IPOs and the liquidity events for some of this capital, it's a lot the same way when it comes to biotech. Doing some interesting experiments that folded proteins this way or that, or get to the 5 nines of purity versus the 4 nines we struggle with here on Earth, right? That's a whole chemical thing, and it's really hard to get things more pure than 4 nines here, and when it gets really expensive at 5 nines, but going to 5 or 6 nines of purity in space is actually pretty cheap. And so if we can have some wins there, where this results in the new little purple pill or blue pill or shot in the thigh, then what that'll do is that'll create the win that feeds the next economic wave. If I'm on the board at AstraZeneca and I have to hear about how Merck or Pfizer just had a big breakthrough from their space research, that's going to be a really awkward board meeting when the chairman turns to me and says, "Hey, how much are you spending?" We say, "We don't have a space program." Like, that's really awkward, and that gets fixed immediately, right? So we have to have these wins so that everyone else has to pile on. And we're so close to them, but we just can't trip over our own feet right now. And it makes me nervous.
All right, something that's really important to me is that, space isn't just about pharmaceuticals, space isn't just about business, space is about national prosperity, the economy, as well as national security, right? And people do want to participate. And it doesn't mean, going and signing up for Space Force. So I know that D.T. Thompson would like me to bang that drum, I'm sure. But, sometimes people want to put their money where their mouth is. And they're not like you, as a qualified investor. And they don't have a few thousand, shekels sort of hanging around in the mattress, but they might have a bit something. And they can play in the retail market. Well, how does, Jane and Joe Six-Pack participate? Like, how can they do that, and how should they do that and not get burned? Yeah, I know, it's a tall order, but hey, gotta try. Swing for the fences.
You gotta swing. So this is not financial advice, and this is George as an economist talking, so please consult your tax advisor. No, but what I would say is it's hard. Right, you do have a few ETFs out there. You do have a few diversified mutual funds out there, but there's not that many pure space plays.
Well, do you even want to do a pure space play though? Because that's dangerous.
So for me personally, I don't. Right. So for me personally, I don't do pure plays on a public company in any sector like that. Right, and that's just me personally. Right, because I think you just have to realize the risks associated with it, and really, we all know that it's compounding that makes a lot of our money anyway, right? Make sure you're putting away your $1,000 a month and it's compounding forever, right? Isn't that what everyone always says? And they're not wrong, right? Because you picking a big winner is possible, but you picking a big loser is also super possible. And so I don't think we're at the point in a market where that's accessible, but really that's not accessible to the market at large. At large, people participating in the market are participating through their 401ks or work. Right, they're participating through free mutual funds or no loads. Right, that's what everyone already does. Right, it's no different here. Right, because individuals, Jane Starbucks or Joe Sixpack, they're not the folks who are actually making the vast majority of the capital allocation decisions. Right, the capital allocation decisions, the people I was talking about before. Right, those are the bankers, those are the private equity firms. They're making the capital allocation decisions, and that's really where we can have conversations that can move the needle.
You have 5 minutes? All right, well then, how about we do this? Why don't we open up the floor? Should we try?
Let's try.
Let's try. How do we open up the floor? In fact, I am definitely going to give it to Rip Kirby. Yeah, Rip definitely has a question, and I can just see it bubbling up.
I really didn't have a big question for that, but going back to some other things, how do you feel about the future? How does energy play into all this, especially clean energy, solar energy, space energy, fusion energy?
The question was about energy. How does energy play a role? Solar energy, oil energy, fusion energy. Maybe we could talk about fission. Yeah, maybe not. Yeah, in space, in the economy, the space economy.
Right. So, this one's louder. So I think there is a lot there when it comes to the research that's happening around space-based solar. I think you see a lot of conversations about it within our community. It's not probably something that's prime time for your average investor, right? But it's something that is part of the conversation right now. I think in terms of the other parts of the energy equation, there's not a lot of bones in space or peat moss, so probably not a lot of oil in space. Sorry. Exxon. But that's okay. We have a lot of sunlight up there if you're close to Earth. And also, let's just talk about nuclear renaissance, right? We had the lead for a long time in nuclear, and it's kind of slipping away. We got to fight for it. We got to keep it. And you know what a great way to do that is? Start making sure that we have the SMRs that we need for space, and those technologies, as they're developed for space applications, they have wonderful terrestrial uses.
What is an SMR?
Small modular reactor.
Thank you.
Sorry. And so there are definite connectivities and connection points to energy and how it relates to space. But yeah, I really think this is about how nuclear has a future in space and also here on Earth. And so as we solve the really hard problems in space, a lot of times we return those benefits to Earth. And I think nuclear is going to be a great example of that.
Anybody else? Or are we actually that brilliant? No, there's a smile. Maybe she's got a thought. Yes, no? All right. Yeah, there is. Let's do it.
Yeah, could you advance or discuss the risk associated with really leading edge technologies versus the investment criteria to invest in those really leading technologies?
Yeah, so when you're talking about leading edge or first of its kind technologies, the investment criteria is quite different, right? So the way it works is this is all just probability, right? At the end of the day, if any of you have played poker, you understand basic probability. This is all just probability, right? So if you have a first of its kind or a bleeding edge technology, and I have a 1 in 100 chance of it succeeding, which means I have to believe that you and your engineering team will be the successful ones on this, I then have to believe that you're opening up a 100x market from there. That's a really different equation from I'm going to put money into a local power plant that's expanding how many solar panels it has, and it's going to pay me a steady 6% a year for the next 10 years until I have to be replaced. These are vastly different formulas. And so when you're talking about cutting edge and first of its kind, it really does come down to that 1 in 100 type of math that the team can execute on something that's 1 in 100, but the returns are also 1 in 100. So is the market need that they're meeting a 100x need? Is it this hair on fire problem that they're conquering and solving for? Because if it's not, and I don't see that 100x, it's really hard to put money into it.
Okay. I think we have run out of time. Thank you very much, George. Everyone, please give it up for George Pullen.